My name is Hunter Wilson. I recently started a website called Wilson Financial. The goal of this website is to give base knowledge to investors on what stocks to buy. Before you put your money into something, however, you should understand how it works. Let's use emojis to demonstrate. These smiley faces are investors looking to make money. Here comes the publicly traded company, Amazon in this case. They also want money, but they don't want the interest-ridden loan from the bank. Amazon sells shares of their business to investors and in turn doubles their investment, making both parties rich. Seems simple enough, right? Both parties are happy? Well, this isn't exactly how it works. Let's get into it. Everybody's heard of Wall Street, the location of the NYSE, or the New York Stock Exchange. Stock trading is usually depicted like this in the media. A bunch of dudes in suits yelling over each other in a claustrophobic space. But what if I told you trading didn't have to be like this? Enter the NASDAQ. NASDAQ was launched after the Securities and Exchange Commission urged NASD to automate the market for securities not listed on an exchange. The result was the first electronic trading system. NASDAQ opened for business in 1971, and regular Americans could invest. Now that we know what the two major global marketplaces are, let's talk more about how they work. Let's go over 3 key points about the stock market. First, stocks are ownership. When you buy a stock, you are buying a small portion of a company, giving you a piece of ownership. So even though you see CEOs of companies like Tesla and Amazon, if you own a share of their stock, you are technically an owner. Next, the difference between primary and secondary markets. When a company first sells its shares to the public, it's called an initial public offering, or an IPO. That happens in the primary market. This is when the price of the stock is selected by the public based on how much they value the stock at. After that, shares are traded between investors on the secondary market, where prices are often determined by the basic forces of supply and demand. If the majority of investors believe a stock will increase in value and rush to buy it, the stock's price will typically rise. The same can happen in the opposite direction, however. If stockholders believe that their shares are not worth what they are selling at, they will start to sell and the stock price will plummet. The last thing we will go over in this video is how to get started. First, you'll need an online brokerage account. I use Charles Schwab, but I will link multiple options in the description below. Once you have an account, there is no fee to begin. Simply transfer money from your bank account to your brokerage account. As beginner investors, please do not use a large sum of money. Get your toes wet first and learn how to invest a little at a time. My website includes free and paid information on how to invest, as well as a complete autonomous budget and portfolio breakdown for pro members. If you are just getting into investing, consider our free version that breaks down Wilson Financial's top 5 stocks each week. Thanks for watching and happy investing.